Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Friday and it is February the 27th. Okay, first of all, happy Friday. And second of all, can you believe it's February or end of February? We're almost in March. What? How is that even possible? This has been such a crazy flyby year already, and we're only in February. So, anyway, if you're here this morning, welcome. So happy to have you. Like I said, my name is Mel. I do live trading here. I welcome traders of all levels. I especially like to help new traders, beginning traders. And this is a place where you can I am going to actually, guys, I'm going to take a call, I think, right out of the gate here. Hold on. Hold on. Maybe not. Hold on. 6869. I'm going to give it a minute. Gavilan is here. Good morning, Gavilan. All right. I'm giving this a minute. I am interested maybe in calls here. All right. I'm jumping in. I'm in. Punch it. I'm in the 685 calls. Up just a little bit, just baby green here. We're kind of close to a top, so it's a little bit of a riskier trade. Well, close to the current top. It doesn't mean it's the top of the day, but close to the top we've made so far. All right, just watching here. There's a little jump. I'm going to take my little baby win at 4%. Oh, punch it. Win here is because see this top we're building right here. There's a little, here's the top, right? But there's a little candle stop, and there it goes. There's a nice little punch for you if anyone followed. I know as soon as we started the stream in and out of a trade, but as I was saying, welcome to this space. This is a friendly, interactive place. It's for I love to help new traders. And we're going to take trades live together. You saw me just take one right now, small 4% win. That's all right. I'll take it. There's our little bounce here over the top. And I'll explain to you why this is the top. It doesn't mean we can't go higher. We sure can. But if you let me expand this screen here for you, and I'll show you where I am seeing resistance. Right here. Do you see this red line? This has been on my chart for a million years. As you guys know, when I go out to my daily chart, you see all those ridiculous red lines. It's very hard to read, but these levels really have importance. As you can see, we are down to the minutia. We're down to the minute here. And this old line that's been on there for so long is holding, look at that, to the tick, right to the tick. Now, I'm not saying we will stay here. We could absolutely break through it, but that is why I jumped out of that call as quickly as I did. So I saw us pushing up over this top. I jumped in on this candle, and once we started hitting right in here on this candle, I said, nope, we're good. I'll take the 4%. And guys, you don't have to do that very many times in a day to make some profit, right? All right. So That is jumping right into the charts here. I want to get back to kind of my intro and say, I love it when you guys say hello. I love it when you join me. And this space is meant to be a place where you can follow my trades, a place where you can learn how to trade, a place where you can ask questions. There aren't that many places out there in the fintech world where you can do that for free. And I'm giving you the benefit of my 20 years of trading experience if you're interested in it. And I'd love to help you. So drop your name in the chat, say hello. It looks like Roger is here. Hi, Roger. Good to see you. All right. Nice to see you. And guys, it's Friday. Isn't that great? I'm so looking forward to this weekend. My daughter-in-law's coming in from out of town. She's studying to be a nurse, and she is almost at the end of her studies. This summer she graduates and has to take her NCLEX, and I have no doubt that she will pass it with flying colors. So we're going to celebrate. She'll be in this weekend, and I'll head over to my kids' house, and then I'll go see my bestie on Sunday, which I can't wait either. It's been too long. So I'm looking forward to my weekend. I hope you guys are looking forward to yours. I hope that you get to spend time with loved ones. That's really what it's all about at the end of the day. I mean, I'm here to make money. I promise you I am. But at the end of the day, isn't it about the people that we get to share our blessings with, right? So that's what my weekend looks like. And we are going to be back again on Monday at 11 a.m. Eastern. I would say this, be careful if you're holding anything over the weekends. If you are holding positions and you can't sleep at night because you're holding something and you don't know how it's going to open up when you wake up tomorrow, your position's too big. So think about that for a minute. When we calculate our position sizes, it's going to depend on our accounts. Now, we cannot trade options very effectively. I'll be honest with you. I don't want to crush anybody, but I'll be honest with you. It's pretty hard to trade options on the SPY in an account that's less than I minimum probably $700. I know that can be really frustrating for some people. I know a lot of you are doing like, side gigs and working, and you're trying, you're hustling, and I get it. But honestly, to trade options on the SPY, I wouldn't recommend. I don't even recommend 700. You can make it work, but it's very, very hard. But as far as position sizes go, if you're working in an account that's, let's say $30,000-$40,000 or more, I would say keep your position sizes to about 1 to 2% of your account. That's really going to be safe. Think about it. If you blew up every single trade at 2%, you've got 50 shots to kill your account. So that is a little bit of a safety there. It protects the capital of your account. 1 to 2% of your account size on any given trade, and keep that size consistent. You can't have 9 wins with 10% gains at $1,000 trade and then jump in there on that 10th trade for 5,000 and take a 50% loss. You'll never make money doing that. You can't do it. So think about that. Keep your position sizes consistent. Keep them to a percentage of your account. And if you can't sleep at night, it's too big. Okay, it's just too big. If you're experiencing anxiety during the day while you're trading, it's too big. So now, if you're in a much smaller account, let's say 1,000, you are going to need to be more aggressive and more risky, and there's just no way around it. If you're trading in a small account, you have to take bigger risks. It's just the way it is. So in $1,000 account, or maybe 750, you're going to be taking positions that are probably 10% of your account. So you've got to be careful. You've got to keep your stops, because in that case, you've got 10 bullets, right? In 10 bad trades that you let it go to 100% loss, you're done. Your account's blown. So this is a riskier situation when you're in a small account. You're risking at least 10% of your account, sometimes more. Sometimes if we're getting in a 0 DTE trade in a $1,000 account, sometimes you're going to be in there for 15%, maybe 20, if you're taking a trade that's an option that's at the money. So, now you're down to 5 bullets. So you got to think about it that way. How many bullets do I have before I blow my account? And that is risk management. You've got to think about that. So that is my soapbox on position sizes and my recommendations. Again, if you can't sleep, if you're experiencing anxiety, if your heart is, you can't breathe, or your heart is fluttering, you're in too big. Don't do it. It's not worth it. It's not worth it. All right. Roger Wicks from Roger and Donna from Alta, Norway. Snowmobiling sounds beautiful. Sounds like cold weather sports. I hope you're enjoying it. And saying hi to Emmy. That's my puppy. She's back there on the floor taking her little nap. I don't know how dogs sleep as much as they do, but she's enjoying it. And David Reese, good morning. Happy Friday. Hope you're well. Thanks for sharing your live stream. I'm in Florida. I love it, David. Florida is my second home, my home away from home. My family is here mostly in Colorado, but Florida that's where I love to be. I love the beaches. I just adore Florida. Love the weather. So enjoy that, David, and welcome. Thank you for saying hi. All right. We are currently range bound. We took a quick call here right at the open. If you guys joined me right straight from the open, you saw me do that. It was just 4%. It's okay. I'm up nicely today. I was in some overnight puts, so I got to capitalize on that beautiful gap down, made 170% on those puts. Took a bad trade earlier today and stopped out at 32%. No big deal. I've already, I was already up from my overnight puts, but I've already made it back in my subsequent trades. So here's another soapbox I'm going to give you guys, since we're kind of ranging sideways here. No trade right now. I'm going to talk a little bit about stop losses, how important they are. Stop losses are the main thing that will save your account. So earlier when we were talking about bullets, how many bullets do you have? Your bullets are going to be expanded if you keep your stop losses. So let's say that you're in, let's say, $1,000 account, and let's say you're going to keep your position size to $100. That's going to be challenging, but let's say that's what you're going to do. You have 10 bullets. If you let those trades go to 100% loss, and as you may or may not know, options have expirations. If you let them go to the end until they expire, you walk away with nothing. Okay. So if you are in a $100 trade and you let that go to max loss, you're going to lose 10% of your account if you're in a $1,000 account. Now, stop outs are going to keep you a little bit safer. I keep my stops usually between 30 and 50%. 50 is going to be aggressive. You've got to have a really good win rate to justify a 50% stop loss. If your win rate is lower than 85%, you're going to have to adjust your stops to probably 30, 40%. And if you're below 75%, you're going to have a hard time getting profitable. I'm just going to say it that way. So stop outs are going to give you more bullets. Think of it that way. So if you have a $1,000 account, you're trading 10% of your account, you have 10 bullets. But if you keep a 50% stop loss, now you have 20 bullets, right? Because now you'll lose 50% of that trade and you've still got that money left to trade with. So now you've just taken your bullets and expanded them. So just remember how crucial those position sizes are, how crucial stop losses are. They're absolutely critical for being a profitable trader. And I'll be honest, I'll be vulnerable and transparent with you. It took me years to stop holding on to losers until they were 100% loss. And I'll tell you something a friend said to me, made me laugh so hard. I've never forgotten it. She said, losing trades are like your exes. You got to let them go. You got to cut them loose. And I laughed so hard because that is the truth. You've got treat your losing trades like your ex. Cut them loose, right? And if you're not cutting them loose, I'm sorry for you. Anyway, that's my humor for the day. All right, we are sitting right here at this top. Look at guys, right where we talked about 68.75 on the button. Right there. We hit it there and we hit it there. So we're just testing it again. We haven't broken it yet. Now this is a little bit of a warning sign. The bulls need to get a hold of this level and push up through it. They're not doing it. They did grab this over yesterday's low of day. They were able to recover that barely, right? Yesterday's low of day is sitting at 684.4, and we're currently trading at 685.3. So barely have they recovered this low of day. It's not looking super strong. I will say I certainly do see the trend upward. Absolutely. I see it, right? But what are we making here? What do we call this? A triple top. That's what this looks like to me. Hey, Mr. Tom, good to see you. And Gavilan is here asking, with the mags down, why are we still up? Seriously, yesterday it was really irritating me that the mags were down so far and the SPY did not drop as much as I had anticipated. My only real solution for that in my head with my tinfoil hat is manipulation. I just think that this market is being currently propped up. I think it's going to have to go. It's going to have to drop, but could we go ahead and make another run for the all-time highs? Yeah, absolutely. How far are we away, guys? 125 points. That's nothing. They can do that in a day. So do we still have a chance to go grab some new highs? We do. But we'll take a look at the daily chart and I'll show you how we're looking like we're making some lower highs. It's looking a little weak to me. But Gavilan, you are absolutely hitting the nail on the head with the mags dropping, with the way NVIDIA dropped yesterday, almost 6%. And we didn't get, we got very little drop on the SPY yesterday. In my opinion, that's just evidence of manipulation because the mags are close to 40% of the SPX. When you have the mags down 1.5% and the SPX down, what was it yesterday? 0.5, 0.6 maybe? Something's not adding up. Something's not making sense to me. So I'm right there with you, Gavilan. Oh, Roger, thank you so much. I appreciate you. Roger's reminding us to hit the thumbs up and subscribe. Guys, I really would appreciate that. Thank you, Roger, for recommending, because this is a free channel. And, at some point I'd like to get monetized, but what I'm trying to do here is help traders. And I'm not charging. I'm not, I don't have anything I'm selling right now. Now, eventually I would like to monetize, but I got to grow the channel. And so anything you could do to help would be greatly appreciated. And that like button and subscribe really does help. So thank you, Roger, for mentioning that. Okay. Teeny little higher highs. Do you see them? Let me zoom in a bit here. High, higher high, not quite a higher high. I guess it's not because there's that wick there. And here's a higher high. So right there, just teeny tiny little pushes up. You could almost call this a triple top. So triple tops or triple bottoms are bearish and bullish plays. So a triple top is when it's trying to hit and break through a resistance. Well, where's our resistance? What did we say? 68.75 on the SPX. That's that line. It's trying to break it and it can't. And it's like sometimes if they keep pushing at it, they can kick that door in. Other times we'll get this triple top and we'll just reverse right back down. But right now we have to pay attention. What do we have? We have higher lows, right? So pay attention. This is the trend. This is the current trend. We don't want to go against the trend at this moment. I'm not going to. The trend right now currently is up, but this triple top is giving me a little bit of courage for puts. So if we come down here and we break our MACD to the downside, we might consider jumping in a put here, but I'd be careful because this trend has not broken yet. All right. So let's talk about what the daily is looking like. I'm watching this trade here. If I were to take some puts here, I would be looking at the 686s for today's expiration. That's what we call 0 DTE. Remember, when we do that, the option expires today. That's why they call it 0 days to expiration. The option expires today. This is a risky trade in the big scheme of things, right? I don't trade in a risky way. I'm more cautious than risky, but the 0 DTE in and of itself is a risky trade because if you let that go, like we said earlier, to the end of the day, you're done. You've lost 100%. So you've got to make a decision early on when you trade 0 DTEs. You don't want to hold these all day. You want to make your decisions early on in the trade. Either you're going to get out, take your profit, or you're going to get out and take your loss. But I don't recommend long holds on 0 DTEs because of something called theta, or we would call that time decay. As we get closer to the end of the day, to the expiration. All right, I'm looking at these puts here, looking at 686s. Not in them yet, but we are getting a little bounce on the VIX. We're getting a little rollover on the MACD. We just haven't broken this trend line yet. So hang tight on that. Not getting in yet. Okay, so the idea is when you trade these 0 DTEs, you want to be in and out quickly. You don't want to hold till the end of the day. That's going to hurt you in the long run, even if it goes in your favor. Sometimes you can get out with a profit if you hold until the end of the day, but at that point, you're praying for a Hail Mary. You need, the longer it goes during the day with this time decay eroding at your value, the longer that happens, the more of a move you need, whatever it is, up or down, the more of a move you need to get your money back out of that trade. So the idea is get in and out quickly. That's my strategy usually. All right, no break of this trend line. So see how I'm kind of watching this here. I could draw, let me make it bigger and I'll draw a line for you. I'm still watching this break here, and we're also sitting right on the 50. So I'm watching that as well. I'll draw a line for you, and I know you can see the bottoms, but sometimes this makes it easier to visualize. So here, here, look at all these touches. Do you see how strong those trend lines can be? And what have we got over here? This is what we would call an ascending triangle. Ascending triangles can be bearish. Usually that is the pattern. Usually, it doesn't have to be, but again, it's representing this triple top here. Now we do if you're squinting, you can sort of see that we're getting an upward move here. So it doesn't have to be an ascending triangle. It's a lot of times it's in the eye of the beholder, right? So you could draw a line here to here to here to here and say, maybe it's a rising wedge, which is bullish, maybe. But it's, like I said, it's in the eye of the beholder, right? So I'm looking at these tops over here based on the wicks. When I look at this flat top, or when I look at the ascending wedge, I'm looking at the actual body of the candle, except for here. So right now, bottom line is we're in a narrowing range. Can you see how the range is narrowing? Much wider here. Look how wide this range is. Boom, boom, boom. Now, what's it doing? It's getting a little smaller. It's getting a little smaller, getting a little smaller, getting a little smaller. So this is uh, it is a form of a range. It's a consolidation pattern, meaning that the price is compressing or consolidating. And when we see that, it's building up energy. When price compresses or consolidates, it's building up energy for a move. Which direction are we going to move? We're really trying to break this top here at 68.75 SPX, but we haven't done it yet. So at this point, the smart thing to do as a trader is to just wait. We just have to wait. We're either going to break this trend line to the downside, or we're going to break this top to the upside. Whether it's this flat top or this rising wedge, we're going to break it to the upside or to the downside. That's what we're looking for. So be cautious when we see price consolidating. Okay. All right. Let's get this back to my regular pointer there. And I'll keep those lines there just so we can sort of track what goes on here. And again, this line has been here for many, many moons. So let's take a look at the S&P 500. The symbol for that on Thinkorswim is the SPX. All right, looking like a wee bit of a drop here from this top. Let's look at the daily real quick. I'm real close to a put here, guys, and I'm still looking at 686s. What I want to see is the MACD roll down. I want to see this rising trend line break, and we're right here. See how this just gets tighter and tighter. The nose of this triangle just gets tighter and tighter. There's another rejection off that 68.75. No break yet. All right. Is the top right chart your SPY 1 minute? Top right is the ES 1 minute, Roger, but very similar chart. Thank you. Great question. All right, another little rejection right here off this 68.75 on the SPX, but no break yet of the downward trend line. Just watching right now. And let's give this SPX a daily look. So you can see all these silly red lines. Do you see them? But when we zoom in, they are quite meaningful. Here's our SPX. Let's zoom out a little bit so we can see the big picture. What do we see here? I drew this line a few days ago. What do we see here? That is lower highs so far. But also, what do we see on the bottom? Higher lows, higher lows. So again, this little pattern right here is being repeated on the larger time frame. You can see it's not the same pattern, right? But this bottom rising wedge is here. This pattern on the daily is actually a pennant or a triangle, right? So we've got the lower trend line coming down, and we can add, here we are, guys, back to our trend line again. I'm watching. I need to see my MACD. Excuse me, Mr. SPX. VIX is slowly dropping, so that's something to be aware of. That while we are kind of building a sideways upward channel, the VIX is slowly dropping, so that we need to pay attention to that. Right, there was a little break right there of our trend line, but an instant recovery. Okay, no trade yet. So based on this daily chart, what we're seeing here is just a whole bunch of nothing, a whole bunch of consolidation. Look at this. Look at this range. It's just hippity hoppity all the way through. There's no firm direction. So again, let me put a upward trend line down here so you can see it. We could draw it here. We could also move it up and hit the body of the candles, but this is fine. You get the idea. A narrowing wedge. That's what's happening here. A narrowing triangle. As same as in this situation, as we get closer to the nose or the apex of the triangle, we are building energy, building steam. And we can't tell by this chart which way we're going to break. We just cannot tell. Did I take my 100 off? Sometimes when I'm teaching, I take my averages off. Let me put my 100 back on here because that's a big deal that we've been watching. The 100-day moving average. There it is. Let's zoom in. Oops, I've got the wrong pointer. All right. Let's zoom in on this 100 right here. So this has been a test that so far we are passing. We came down and bounced off of it. The 100 has moved, but we have really distanced ourselves from the 100. It's now sitting. How is that right? That doesn't seem right. Is that right? Hold on. Something doesn't look right to me. Give me a minute. Let's make that a symbol. Okay, nice little push up here. We might consider calls if we can break this top. I'm going to load the 685s. We're sitting at 68.75 on the button. No push through just yet. All right. I need to, for some reason, my 100 looks weird. Give me a second here. Yeah, that looks better. I normally keep that line green. So let's get rid of that exponential. We don't want that. All right, that looks better. I knew something wasn't right. I had the exponential on there, and that looks much different. All right, Gavilan, puts or calls. Gavilan, we are just barely breaking the top of this range. So we could consider calls. I do have calls loaded, 686 calls, but I'm not in them yet because we're just, it feels like it's still kind of hovering here. All right, so back to this 100. All right, now we're pushing. Okay. 68.77. Let's see if it'll give us a little downward movement here. 68.77, still kind of hovering here. Tiny break of that upward top. Little rejection, back to 68.75. Nope. No cigar just yet. Okay, I'll wait a minute. And if this rolls down under 68.75 and we start getting a MACD rollover, we can consider puts. But be aware, do you see how this MACD is only giving us about 5 or 6 minutes per rollover? That's a little bit dangerous. We want to be careful of that. That's part of this shrinking range. All right, so the 100, again, pierced it here and bounced, pierced it here and bounced, pierced it here and bounced, pierced it here, just sitting right on it today, right on it at 68.30. That was our low, right? The low of today, 68.31, touched it and boom, bounced. So this is crucial, this 100. And the fact that we also came down through the 68.50 level was also a big problem, but the bulls were able to recover it and pull it back up. So right now, as long as the bulls maintain 68.50, we won't see much of a drop and we could see a melt up day. But if we lose 68.50, and that's not very far below us, 22 points below us, we could see waterfall selling. So I'm being very cautious in this market because we are still in elevated VIX. Now it has come down under 20, but we are still in elevated VIX territory. So I'm cautious watching both directions, cautiously watching both directions. Okay. So this, again, I think you get the point on the daily. I think we're good here. Let me get back to my minute chart. And are we going to take some puts here? Maybe. Let me extend our line here a bit. It's breaking a little bit, isn't it? All right, I'm going to load up the 686s on the put side. I'm not in them. The other thing I'm kind of looking at for this trade is the 50. See how we've really kind of been hanging on to the 50 period moving average. So that's the other thing I'm kind of watching. Coming down a little bit here. All right. 68.71. We're not down too far. All right, I'm going to give this put a try. I'm in, punch it. All right, I'm out at 12%. Let me know If anyone followed on that, it was fast, but it was a nice trade there. And it's right there at the 100 period moving average. Getting a little bit of reaction from that 100. Let's see if it keeps going. Nice drop there. So can you see how our structure really showed us where we were going? It really did show us where we were going. All right, apparently that was a 16% win, guys. Congrats. Hopefully you were able to catch it. It was fast. I think that one I was in for, holy cow. I was in for 18 seconds, guys. 18 seconds for 16%. Guys, this is the beauty of day trading. This is the beauty of scalping. 16 seconds or 18 seconds for 16%. What is that? But look at how our structure helped us. Drawing these lines can help. We could, okay, Gavilan, 15. Yes, nicely done. You've really gotten good, Gavilan, at following me. I know it's fast, and I know it takes some muscle memory. And if you're new and you can't follow that quickly, it's okay. Don't stress about it. Paper trade, get comfortable with your platform, get comfortable with the mechanics, get that muscle memory going on those orders, because that's where I'm really fast. And there's a reason for that. That is my strategy. That is my style. And usually I have a pretty high win rate. It usually holds over 90. Occasionally we dip down into the high 80s, but on my last 2 years of trading, over the full 2 years, I'm holding an 88% win rate. 2 years. So that's pretty, not tooting my horn there. I'm just saying there is a method to my style here, and it may be fast, but it does work. All right. Nice trade there, everyone. I hope you guys were able to follow. That was a lot of fun. We'll take that 16% all day long. And it's still going. Coming back down to test our VWAP. Again, take a look at how the structure helped us to take this trade, guys. I want you to see it. We were holding here, holding. Well, let me zoom out. Maybe you can see the lines better. As we talked about this rising bottom, remember? And right in here, as we broke this rising bottom and at the same time started rolling over on the MACD, started seeing our VIX rising. As we see that structure break combined with our MACD rolling over, combined with our VIX moving up, that gave me the signal that it was a go. And that's why structure does matter. When I say structure, what I mean is you could sort of think of it as a building or some sort of an object that you build, right? You see that there has to be structure, foundation. And this is structure right here when you see it creating these patterns. All right, still coming down, guys. David Rees, 88% win rate for 2 years is really good. Congrats. Thank you, David. I appreciate you. Thanks for saying that. I have taken hundreds of trades over the last 2 years. And I usually average about 20 a day, which is a lot. Professional traders would tell you, I am a professional trader. other professional traders would tell you that's over trading. I hear that so much that, they will say that, oh, if you're taking, multiple trades a day, you are over trading. Well, maybe if you're a newbie or you don't know what you're doing and you're just, blindly chasing movements, yeah, you can be over trading. Mine is a strategy. And so it works. It works for me. That's all I can say. All right. Thank you, David. Thanks for that's very kind of you. Thank you so much. I appreciate it. All right. So what have we got coming up for our next move? Let's see what it's starting to look like. Starting to look like it was a bit of a triple top there. All right, Donna got 13. Nicely done, Donna. All right. So what are we seeing now? We are seeing a test at the VWAP. Now this is the futures. Our VWAP on the SPY is a little bit lower. And the main reason for that is just that they're charted slightly differently. They're really, the charts are basically identical, but days start at a different time. So it's just a little bit of a different charting effect for the VWAP. They're usually right close to each other. But we've got the VWAP getting tested on the futures, and we're just above it on the SPY. We're still holding our overnight low, or yesterday's low of day. We're still holding that. Bulls are still able to hold that. So let's see, do we get a bounce from here? We could. Our VIX has given us a bit of a rise here. Back up over 20. Breaking the VWAP on the ES. So the VIX still kind of slowly rising, so I'm not quite ready to consider calls yet, even though it's looking like it's slowing down here at the VWAP. See how it's just kind of slowing down, but the VIX isn't telling us that we're stopping yet. So keep your eye on that. Here we go. Little break of the VWAP there on the ES side, not on the SPY yet. Or VWAP sitting right here. All right, what we want to see, if this is going to rise back up for calls, we'd want to see our VIX start to move down again. We want to see our MACD roll up and turn green. We want to see a recovery of the VWAP on the futures chart. So we don't have any of that just yet. In fact, it looks like we might come down farther. All right, David, how many hours a day do you normally trade? I'll be honest, David, I trade all day, every day. All day, every day. It's my profession. It's what I do. And so, I do these videos, I coach other traders, but my bread and butter is my trading, and I do that all day, every day. Some people will say, I don't know how you stand it. How do you sit there and stare at a screen all day? Well, first of all, I love it. And second of all, I've finally, after many, many years, learned how to be profitable. And that is a lot of fun. I can stare at a screen all day long when I'm making money. I love it. But I actually enjoy trading. I enjoy the markets, watching the movements, trying to decode it. It just, for some reason, my brain likes that challenge and it does work for me. You can trade less hours for sure. And if you are trading or want to trade less hours, or maybe it's a side hustle or whatever, you can do the first morning hour. Look at that push. You can do the first hour of the morning. You can also do the last hour of the day. Those are usually the higher volatility, higher volume trade hours. So, you know, that first hour of the morning, that last hour of the day in trading are usually the higher volume hours. You usually get more action there. So if you're, you know, doing a side hustle or you just can't trade all day, you can still make money trading that first hour, that last hour. I mean, you can make money in the middle of the day too, but it doesn't move the same usually. All right. BD, you have to live it, breathe it, want it. I'm with you, BD. I'm with you. All right, look at this bounce, guys. Could we consider calls here? It's really wanting to get right back up to that zone where it was. It wants to recapture this trend line. That's some strong movement. We've got a movement down on the VIX. We've got a cross on the MACD. I am going to load a call here at 686. I'm not in it. We don't have much to go to the top, so the risk might not be worth it to me. Let's see, how much do we have up to the top? Only 7 points. I honestly, I don't know if it's worth it to me. Even if they continue upward and break the top, I might not take this trade, because if we do stall out here, there's just not enough points to make the risk worth it. All right, David. Yes, me too. I love it. I love that you guys love it. I have found my people. The people in your life will tell you, "Oh, you're gambling. You're just throwing away your money." A lot of the people closest to me, they know I'm successful. So I've taught all of my family how to trade. But you know, people in kind of that next circle, I'd rather not even tell them I trade because you get so many comments. You just do. Um, so usually I say I'm in the financial world. Um, but yeah, I love it. I live it. I breathe it. I do. Okay. So there we go. A little slowdown here. Glad we didn't take that. So I call these kind of candles here. Not saying we won't continue up. We could. We certainly could. But these kind of candles, after we've spent what 15 minutes coming down, and then we traverse 50% of that in 1 or 2 minutes, I call those inducement candles. They are designed to suck you in. Now, not saying we can't move up. I'm sure that we can, but I'm usually wary of these types of candles because a lot of times they're designed to pull you into a direction, and then they either reverse it or pull it sideways. Doesn't happen every time, but you do see it happen a lot. I can so relate to what you just shared. Amen. Oh, I love that, David. Thank you. Yeah, you do get a lot of comments from people, and you know, you just can't care. You just can't care. You have to know in your heart and your mind that this is what you were designed to do. And I know that. So, you know, when people want to get, you know, snippy with me, it doesn't bother me. It doesn't bother me. But if you feel insecure about it, that's when it's like, hey, I don't like when you say that. So you got to know that you know that you know. All right, here's a push right back up to our zone. Look at that. Right back into the zone 68.73, almost back to our resistance level. All right, Gavilan, it's another great skill that I've learned. Thanks, Mel, for the tutelage. You're welcome, Gavilan. I appreciate you. Roger, you can laugh all the way to the bank. That's exactly right. People see what you drive or whatever. What do you do? And that's when they're like, but you're exactly right, Roger. We're laughing all the way to the bank. And I'll tell you, it took me a lot of years to get here. I've shared my sad story on this stream before, but it wasn't always like this for me, and it's taken an awful lot of years and an awful lot of hard knocks, and I've blown up my account more times than I could tell you. I've blown my account up and gone to zero and started over so many times, so many times. So just just know that there is some tuition involved. It's not all roses and money. It's hard work and learning, and you have to be dedicated to it. If this is truly what you want, there's no free lunch. It's going to take some effort and some time. But that's why I'm here, right? I'm here to help you with that, shorten that learning curve a little bit for you. All right, Roger at blow up number 4. Roger, you're better than me. I honestly I couldn't count. I would say if I had to count the times I blew up my account over the last 20 years, I mean I haven't done it in years and years, but back in the day, I would say it would at least 10 times, maybe 12. And in those days, I couldn't afford to do that. I came through a divorce that really hurt me financially. I had kids at home. I was working as a waitress after my divorce and trying to build my little bitty trading account, and I did that over and over, over and over. But it paid off, and I would say that to you all. If you've had some bad experiences, if it's hurt, if you've blown up your account, don't give up. If you know that this is for you and you're willing, here's the thing, you got to be willing to put the work in. A lot of people want to just show up and be hand fed and, be, I want to make $1,000 a day. Well, that's nice. We'd all like to make $1,000 a day. However, however, it takes time, it takes effort, it takes grit, it takes being able to stand the hard stuff the market throws at you and the hard things people say to you. And if it's for you, then nobody can take it away, and you just keep trying. What did Edison say? He said, I didn't fail 10,000 times. I found 10,000 ways not to make a light bulb. And that's kind of the approach, right? We haven't blown up our account a dozen times. We've found 12 different ways that we shouldn't be trading. All right, moving back down here. So what did I say, guys? Inducement candles. Look at that. Inducement. Suckering you in. That's exactly what they did. They're a bunch of fakers, phony balonies. You got to watch for these inducement candles. They'll do you in. Usually, if I see a very large candle or even two, I'm going to be very leery of it because this is the baloney, right? Okay. David, what color is your Porsche? David, I drive a 2024 Mustang convertible, and it is my car of choice. It's just, I love the Mustang. It's an American muscle car. Absolutely my little baby for sure. Roger, 2004, 2008, 2020, and 2025. I'm sorry, Roger. You blew up in 2025? I did not know that. I did not know that. I am sorry to hear that. All right, Roger, haters gotta hate. That's what they do. It's not you. That's right. That's exactly right. All right, guys, we're getting close to the end of the stream. Let's talk about the rest of the day and the plan. It's sideways. If you guys take a look at it, you'll see we're sideways, range bound. Roger, suckered into silver and gold and Bitmine in 2025. I'm sorry, Roger. That really, really stinks. But you know what? You're doing great. You are a great trader. You're killing it. And you've got the skills to gain all of that back and more. Okay. So let's take a look at what's going on today. I'm going to pull these lines off so that they don't influence us. Right here. And let's look at a cleaner version of the chart. Okay. What do we see in here? Bit of a triple top with a little pierce, almost a little mini head and shoulders, just a little baby one. You can almost see it here. Here's the head. Here's the right shoulder. But by and large, we're in a range. We're bouncing off the VWAP. Now I'm looking at the futures, right? The SPY isn't that much different. We're bouncing off the VWAP and we're still consolidating this range. It's still a small range. So when we're in range, we've got to be careful, sit on your hands, wait for the range to break, wait for break of trend, and make sure your break of trend is corresponding to your other indicators. I like the MACD. When you see the break of trend and you've got your MACD confirming, then you can take the trade. However, this range right here is not big enough to make the juice worth the squeeze. We are sitting at roughly 83 to, I'm going to call it 70, 71. We're sitting at roughly a 12-point range. If we don't break that up or down, I would not trade this in the middle. I wouldn't do it. Now, we've taken 2 trades on this stream, but that was a break of trend here, so we had good reason to do that. Right now, we don't have a clear trend other than this sideways range. So at this point, I would trade a break of range to the up or the downside with strong confirmation, not just a tiny little, look above and fail like we had here. That's a look above and fail, but strong confirmation break of range. So again, overhead, what are we looking at? 68.75 on the SPX. Keep that in your mind. If for whatever reason we should drop today and come back down and hit the 68.50 zone, watch out. If we get below that, we could definitely get a waterfall sell-off. But right now, I'd be looking at trying to break the low here at 68.60 on the SPX. So SPX numbers, 68.75 and up, 68.60 and below, but clear breaks, not tiny look above and fail. Okay. All right, guys, it has been a pleasure. Oh, let's see. Roger, 2020 was the credit spreads on the SPX. Yeah. You're not the only one. Yeah. I get you. I'm with you. I know. I feel your pain. But you know what? You have found several ways to not trade, and you are fast becoming a very, very strong trader, Roger. I watch your trades. You do great. And so don't, just consider that tuition. Consider it. The market will take its pound of flesh. It will take its tuition. There's no way around it. So, all right, guys. David, thank you. Mel, you're a blessing. Thanks, David. I appreciate you. I appreciate each and every one of you. Thank you guys so much for joining. We are going to be back here on Monday. Like I said earlier, enjoy your friends and family. That's what it's really all about. That's who we're making money for. And, that, again, don't put yourself in a situation where you've got anxiety or you can't sleep. Enjoy your friends and family. Take your weekend and enjoy those people. All right, you guys, I appreciate you all so much. I'll be back here again on Monday at 11 a.m. Eastern. Bye for now.